Alright everyone, welcome back to the channel for another Bitcoin update. In this episode, we're going to be talking about the upcoming liquidity crunch that I do see taking place in the cryptocurrency ecosystem very soon. So within today's video, we're going to be talking about a bunch of important things outside of the technicals. We're going to be letting you know why these cryptocurrency exchanges are going bust, what is happening with these margin calls, what is happening with these lending protocols that are pausing withdrawals. By the end of this video, you'll know all about liquidity crunches and subsequently why things like Celsius, Vold, Voyager, all of these different lending protocols, all of these different exchanges are going bust right now and pausing withdrawals. Before we do jump into this, we first need to understand the concept of what is a liquidity crunch. So within the context of the cryptocurrency ecosystem, a liquidity crunch is simply where, let's say, an exchange holds 100 of your Bitcoin and that exchange does not back up that Bitcoin on a 1-to-1 ratio. Let's say they use that Bitcoin because you've lent that to them so you can earn 5% yield a year, and obviously you can't stake Bitcoin, so they've had to get that 5% from somewhere. They've got that from selling your Bitcoin on the open market, putting it in a leverage trade, investing in different products, investing in different altcoins, investing in their community, investing in their exchange, whatever it is, and they've gone and lost that money, and subsequently this is what we're seeing with Celsius, where people are trying to withdraw that money, but there is not enough of that asset backed on a 1-to-1 ratio. So in its simplest terms, a cryptocurrency crunch or a cryptocurrency liquidity crunch is where everyone is trying to withdraw their Bitcoin and other crypto assets, but that exchange or protocol does not have enough to allow everyone to withdraw, and this is when you start seeing people go bust left, right and center, and exchanges and protocols are pausing withdrawals. This is why all of these things are happening at this moment in time. So now we know what a liquidity crunch is, let's jump right into the first couple of talks that I want to mention in this video before we do move on to some concepts like minor capitulations, which we'll talk about in the latter half of this video. So right off the back, starting with Celsius. Now, it's almost been a month since Celsius has been down. It's been down since June the 13th, and if you've been keeping up with this one, you'll know that basically they had a large amount of debt, a huge margin call for Bitcoin, and their assets were not backed on a 1-to-1 ratio. Their saying was unbank yourself, and then they started freezing people's assets because they did not have enough reserves to actually let people withdraw their cryptocurrencies on a 1-to-1 ratio. So this is what's going on with Celsius. Celsius is currently witnessing a liquidity crunch, and it's the exact same with Vold, it's the exact same with Voyager, and it was the exact same with Mt. Gox back in the day. A lot of you people who are new to the cryptocurrency ecosystem have probably never heard of Mt. Gox, because this was one of the first exchanges that went bust. But first of all, let's also talk about what's happening with Vold, because the exact same is happening with Vold as it is with Celsius. As you can see, Vold has made the quote-unquote difficult decision to suspend people's withdrawals. This has been in play since the 4th of July. So, once again, they are currently experiencing a liquidity crunch at this moment in time. What is happening with Voyager? The crypto lender Voyager is filing for bankruptcy. Why is Voyager filing for bankruptcy? Because they had their assets backed at a 23-to-1 ratio. Let that sit in. That means if you, the only investor, let's just make it super simple for the maths. Let's say you're the only investor in Voyager and you deposit 23 Bitcoin into their lending platform, and they're going to say, hey, we'll give you 5% yield. We obviously know Bitcoin is proof of work. It's not proof of stake. You cannot stake that and earn a reward from it. So if you are getting a quote-unquote staking reward for your Bitcoin, it is not a staking reward. You are getting an IOU. You are basically an uncredited investor. If you do, or if they go bankrupt, you are not getting that cryptocurrency back. And once again, let that sit in. It's backed at a 23-to-1 ratio. That means if you're the only investor in Voyager and you deposit 23 Bitcoin into their lending platform, they will sell 22 of those Bitcoins for other investments, and they will only keep 1 Bitcoin. So What happens if you want to go and say, hey, I want to withdraw my 23 Bitcoin right now? They're basically saying, hey, we can't do that. We don't have your 23 Bitcoin. We have your 1 Bitcoin, and we made a bunch of terrible trades using leverage. We invested in a bunch of altcoins and shitcoins. We invested in our business, which is a garbage Ponzi scheme, and now it's going underwater. We're having to file for bankruptcy, and we can no longer give you your assets backed. We can give you, 1/23 of what you had backed with us. This is exactly what's happening with Voyager. This is what's happening with Vold, and this is what's happening with Celsius. There is a massive cryptocurrency liquidity crunch that is playing out in the markets right now. We also have a massive, or this was a previous liquidity crunch scandal where Mt. Gox basically went bankrupt years and years and years ago. This has been a case that has been going on where creditors have been asking to make repayments and pay them back for the cryptocurrency that they lost for years now, and it's finally starting to come into fruition. So they have approximately 141,000 Bitcoin and 142,000 Bitcoin Cash that they are going to be having to pay back to these investors. So this marks over a $500 million refund for these people. What do you think the people that are going to do that had, millions in Bitcoin back in the day, and they think cryptocurrency is a scam because they got scammed by Mt. Gox, and now they're finally getting their refund? Do you think they're going to want their refund in Bitcoin Cash and Bitcoin after witnessing all of these exchanges go bankrupt, the price of Bitcoin go down? I would hazard a guess and say probably not. The average person that got scammed from Bitcoin back in the day is probably just going to want their US dollars back and run for the hills. And, I don't necessarily blame them. I have a slightly different perspective. I have also been rugged by an exchange back in 2017, which I held multiple Bitcoin on. I learned my lesson then, which is why I am very, very black and white, and I do not like to sugarcoat when I do talk on this channel. I do let you know if you have your Bitcoin on an exchange and you are witnessing these upcoming platforms, these exchanges having liquidity crunches, and you are not getting your cryptocurrency out and putting it on a hardware wallet, what are you doing? Learn from other people's lessons, learn from my lesson, learn from what's going on with all of these scandals and all of these liquidity crunches and bankruptcies. Get your cryptocurrencies off an exchange. I think it's been very, very clear in the past couple of months, looking at Celsius, Vold pause their withdrawals, looking at lenders like Voyager go bankrupt. There's also calls that KuCoin might be going under. Personally, I do not think that is the case. At this moment in time, there has been a huge amount of withdrawals from KuCoin, a lot of FOD that is going on in the markets. I would like to heavily emphasize it is not backed up by any quantitative data. It has not been proven whatsoever, and it is all just rumors right now. But nonetheless, I do just want to mention this because it does add extra fuel to the fire, even if it is not valid. Before we do move on from the liquidity crunch, before we talk about the minor capitulation liquidity crunch, I would also like to talk about the margin calls for accredited investors such as Michael Saylor, which is the most prominent one. Now, while Michael Saylor and other large money institutions like Celsius have been able to lower their margin calls, or even diminish their margin calls to zero or close to zero, can you imagine the margin calls from people that are just becoming accredited investors that are not on Michael Saylor's level? A lot of people that we don't even know, people that have $100,000, $1 million that are just buying Bitcoin and have been leveraging it up. This is basically why the price has been moving down so fast, because we've been having tons of margin calls. These margin calls have been cascading into liquidity crunches as exchanges that have been leveraging your Bitcoin that do not have your assets backed on a 1-to-1 ratio are going bust one after the other. Michael Saylor is kind of a unicorn in all of this because he's just got so much free capital that he is readily available to that he can decrease the margin call. He has enough faith in Bitcoin that he can just keep on taking out more debt and lowering that margin call. But if Michael Saylor, was getting somewhat close to becoming liquidated, you can imagine what a company or what a person that isn't Michael Saylor, that doesn't run a company like MicroStrategy that has readily available cash, is probably going to be going through in the next couple of months if the price of Bitcoin keeps on moving down. If it does keep on moving down, you're going to see more margin calls for accredited investors, and you're going to continue to witness liquidity crunches for popular exchanges, for lending protocols and the such. So with that being said, let's move on to the minor capitulation before we do wrap up this video. So miners are just like exchanges. They're just like lending protocols. A lot of them over leverage themselves. A lot of them use leverage and use debt in order to buy a large amount of GPUs, mining equipment, and subsequently they take out debt and hope that they're able to pay it off with their Bitcoin mining rewards. But when those margin calls come, when the price of Bitcoin goes down, but you're witnessing the hash rate go on a massive run to the upside, and we can tell this minor capitulation is happening by looking at the hash ribbons, where we can see the hash rate is just exponentially running to the upside right now, but the price of Bitcoin is moving to the downside. And this is basically meaning, you know, it is costing miners so much money to mine the same amount of Bitcoin. The block rewards will not change until the next halving, so they're basically mining the exact same amount of Bitcoin per block, but the hash rate is going up, meaning it costs them more electricity to mine that same Bitcoin block. And as I'm sure all of you have been witnessing around the world, inflation is going through the roof, so the cost of electricity is going through the roof. The difficulty adjustment on Bitcoin is going through the roof as well. So as you can see, it's becoming harder and harder to mine that same Bitcoin block, and because of that, we're seeing a lot of minor capitulations happening where over leveraged miners are now going under the water. Because of this, we're starting to see that miners are having a massive capitulation event, and we're getting an onboard of GPUs and mining equipment. That obviously you need GPUs in order to be able to mine Bitcoin blocks. At this moment in time, we're having a massive supply influx of GPUs, decreasing their costs. As you can see, you know, they're selling 3080 GPUs for $523, which is exceptionally cheap. And they're selling these things like no tomorrow. There is so many of these. I'm sure if you just go on Google Images, you can see, you know, there's photos with hundreds and hundreds of these GPUs, because miners, once again, they're getting these margin calls. It's becoming more expensive to mine that same Bitcoin block. The hash rate is going up. The difficulty rate is going up. Electricity costs are going up, and these margin calls are coming left, right, and center. The more the price drops, then the more the cascade event happens. Now, I would like to say with this hash ribbons indicator, typically when you do see that final minor capitulation, the bottom is it basically perfectly calls the bottom. Now, we really haven't seen that last final outflow at this moment in time. We haven't started to see tons of miners capitulate and the hash rate go down, and until we do see that, I don't necessarily think that the Bitcoin bottom is in. So I hope you did enjoy today's video. This was not, as you can tell, a TA video, but it's very important to talk about these concepts outside of just regular TA, because we do need to understand that the markets are absolutely tapped at this moment in time, and we are not only witnessing a large liquidity crunch, but we're likely to see continuation with this liquidity crunch. That's all I've got for you today. I hope you found some value in today's content, and if you take away anything from this video, if you hold Bitcoin and you do not have a hardware wallet, slap yourself in the face and go and buy a hardware wallet today. Do not let these exchanges and protocols sell your Bitcoin on the open market, leverage trade it, lose it, because you only have yourself to blame if you lend your cryptocurrency and your Bitcoin to people like Voyager, if you lend it to crypto.com in order to earn 4%, if you lend your Bitcoin to crypto.com, it doesn't matter who you lend it to earn 3 or 4% interest. I promise you, at some point in time, you are going to lose all of your Bitcoin for a measly 3 to 4% reward. And if you don't remove that reward in the first place, then you will lose everything and it will all be for nothing. For the love of God, take control of your crypto, not your keys, not your crypto. I think this video should have definitely outlined that. That's all I've got for you today. As always, my friends, Cowboy out. Peace.